Hey everybody, so we're about to have another important week in this market, and I'm going to break this video up into two parts where we're going to have a part where we just talk about the Federal Reserve and interest rates, and we're also going to talk about technicals later. So on Wednesday, March 22nd, we're going to get the interest rate decision. If I scroll down here a little bit, you can see that this is going to happen right around 2 p.m. Eastern Standard Time, and it's widely expected to be 25 basis points. Now, let's just go ahead and jump straight to the Federal Reserve website. Now, when we get this data drop, you're likely going to see it under the press release, but you might also find it if you just do an economic projection search. So the difference between this Federal Reserve meeting and other meetings is that this one happens once at the end of every quarter. So basically it happens 4 times a year, and this is when they give out the summary of economic projections, which I'm going to go over real quick. So I'm going to look this up right here in the search bar. And then let me just show you the most recent one. So right here, we're going to see summary of economic projections, December 14th, 2022. I'm going to go ahead and I'm going to click into that. Now, there's going to be a lot of information here, but here's where I'm going to show you the most important one. So this one is very important, this table right here. You're going to find it at the beginning of this summary of economic projections. So right here, you can find this on page 2 for this specific data set. So here's what they show you. They show you all these different variables that they're measuring. So they're measuring change in real GDP. So they show the last meeting's projection as well. So right here we see September projection because the last FOMC meeting that we had was in December, but the one before that was the end of September. So they're basically comparing their prior projections to their current. So this is their most current projections, and we're going to get another new round of current projections that are going to measure up against the December projections. So here we're looking at changes in real GDP, unemployment rate, PCE inflation, core PCE inflation, and we're also seeing where they think the Fed funds rate is going to be. So obviously, this right here is very important. Where they think inflation is going to be is very important. Where they think unemployment rate is going to be is very important as well. And changes in GDP, that's going to be important as well. So if we see this number, if we start seeing changes in GDP going below 0%, obviously, that would say, hey, you know what, we might see a recession. So that's the worries right there. So what are we looking at right now? Well, we're looking at GDP right here at around 0.5. But, in that last report in September, they were saying, hey, 1.3. So they were expecting it to be much stronger for 2023. But in that last report that we got for December, they're expecting this to be a little bit weaker. For unemployment rate, this number seems kind of low. I personally think it's going to be a little bit higher than this. But we'll see how that gets adjusted in this next report. And PCE inflation, well, yeah, they're really not expecting it to go down as much. So as you can see here in the September projection, they're expecting this to really plummet. But now they're expecting it to be a little bit more sticky here. So we'll kind of see how that plays out as well in this next report. Obviously, if they're revising their numbers upwards, that just means that inflation is going to be stickier than we actually expect it to be. Also, Fed funds rate right here, they're expecting this rate to be around 5.1% by the end of 2023. We'll see how that changes. Now, obviously, what's important as well is the next year's projection too. So what are they thinking about 2024? Right now, they are pricing in rate cuts for 2024, and they're expecting to drop it about 1%. So what we're going to want to watch out for in this next report, we're going to basically the first thing we want to watch out is this number changing? Are we going to get a revision downwards or are we going to get a revision upwards? So is this going to be 5.5 perhaps? Or is it going to be 4.5? Now, keep in mind, the Federal Reserve doesn't necessarily have to take it all the way up to the rates that they're projecting. This can essentially just be a tool to scare the markets. So maybe they could revise this upwards and they could say, well, we're going to take it all the way to 5.5. Now, that's going to spook the markets a little bit without them actually having to do open market operations to actually make that occur. And then in a later meeting, they could just revise it downwards. They'll say, oh, never mind, you guys. Well, take this back down to like 4.5 or whatever. So this is something to watch out for. So obviously, pay attention to this number. Is it going up or is it going down? Now, 2024, are we still expecting that 4.1? Are we still expecting 1% of interest rate cuts? So let's say that for this report, they revise it upwards to 5.5. Well, does that mean that the 2024 median is just going to be 4.5? Is it still that 1% difference? Or, do they keep this the same? Maybe they raise it to 5.5 and then they decide that they still want to keep it at 4.1 next year. So these are some things to watch out for. Now, if we scroll down a little bit more, we're going to look at the Fed dot plot. So this is important as well because we want to see how these individual members are voting. So these dots are basically their way of voting. So if they're saying, you know what, I think that for 2023, I want to put my vote at 6%. So, that's essentially how they're voting. So they're these little dots are votes. So this bracket right here, that's 2023, 2024, and 2025. So now I'm going to scroll back up. Just remember those numbers. So right here for 2023, we see that all these dots are clustered right around 5 to 5.25. So what we want to pay attention to, how is this cluster going to change? Are there more people who are bringing these dots down? Are they thinking, oh, well, now half of these numbers right here are now projecting 4.5%. So, or maybe, half of these numbers right here are now projecting 5.5%. How do these dots change? So we want to kind of see this. Right now, it seems that the majority, is hanging out right around this 5 to 5.5 region. So do we see a little bit more variation? Do we see more people saying, hey, you know what, I think 5.75? And do we see more people saying, hey, you know what, I think 4.5? So do we see a division in the Fed? Do we see more people thinking in extremes? So, maybe you got very hawkish people, they're saying, hey, you know what, inflation is going to continue going up. We can't stop now. We got to take this to 5.75. And then you have the other half saying, hey, you know what, the bank crisis, it's making me worry. Maybe we're doing too much too fast. Let's take it down to 4.5. So these are the things that you want to watch. Now, also, you want to watch 2024 as well. So 2024, there's quite a bit of variance here, but you can see that the majority is clustered right around this 4 to 4.25. You want to see how this changes as well. So do you see all of these guys coming down to like this 4% level, or maybe they want to take it down even further? So these are the things that you want to watch. So that basically concludes my Fed presentation part right here. And then next, we're going to jump right into the technicals. All right, so if we're looking at the sector heat map, this is the S&P 500 heat map the last week. So here it's very clear what's going on. You can see energy underperforming. You can see financials underperforming. You can see utilities and technology outperforming. So, what is this saying? It's saying that, hey, you know what? Right now we have a rotation. So right now, right here, we're looking at this recession theme. We're seeing energy fall. We're seeing financials fall. But we're seeing a rotation into tech. But notice how the rotation into tech is mostly in these big mega cap names. So this is a flight to safety because I believe in the shorter term, people are seeing these yields fall. They're seeing the dollar fall. So, their first thought is, hey, you know what? Maybe tech would be a good place to be positioning money into, because you have to think these mega cap tech stocks, the entirety of last year, they were essentially facing all of these troubles from unfavorable currency exchange rates. So for example, like Microsoft, I think they were taking about a 6% loss in revenue due to unfavorable currency exchange. So these are all multinational companies. So this definitely does affect them. So a weaker dollar is good for them. But what these market participants aren't necessarily thinking about is just how a recession is going to hurt all of their revenues. Now, keep in mind, when we had inflation, this was good for revenues. So, revenues were essentially going up. And you have to remember that when you're looking at an income statement, it's not adjusted for inflation. So let's say that inflation goes up, then that means revenues go up as well. But what happens when inflation goes down? The same thing is going to happen. Revenues are going to go down as well. But on the flip side of that, you are going to see those unfavorable currency exchange. That loss from that department, that's going to go down. So there are some very interesting developments, and I think right now we're kind of in this really awkward phase where we're not necessarily seeing inflation come down that much, but it could happen very rapidly in the near future. So that would be an interesting development to see how the stock market plays out. But I do believe that this move into technology is it's not very how do I say this? I don't necessarily think that it is a good move. I think it's just a short-term rotation. So we'll see how this plays out. Now, let's go ahead and let's look at one more thing before we move into the actual technicals. The fear and greed indicator is still in extreme fear, so something to pay attention to. Now, if we go back to the heat map, that's clearly not the case for the technology sector. There's extreme greed going on here, but extreme fear is showing up in the energy and the financials and the basic materials as well. So definitely something to pay attention to. Now let's go straight into the technicals. So I'm going to start with this right here. So this is basically looking at the spread between the March Fed funds futures and the December Fed funds futures for this year. So as of now, let's see. As of now, we are essentially pricing in about one rate cut. And you can see there is a lot of volatility going on here. So the way that this works is we're looking at where the interest rate is going to be after the March meeting and where the interest rate is going to be after the December meeting. So right here, this is basically saying, hey, you know what? For the December meeting, we're essentially going to see interest rates about 0.25 basis points lower than where interest rates are going to be in the March meeting. So that is how this plays out. But just look at the extreme volatility here. Like nobody freaking knows what is going on here. Because, just not too long ago, we were literally pricing in almost 1% higher. And now we're literally pricing in about 0.25% lower. So this is absolutely crazy. It's literally just producing massive wicks. And this should not be moving this much. But the reason why it's moving this much is obviously because we have those bank runs. We have this crazy bank situation. We have the Fed discount window. We have the Fed's balance sheet inflating. So there's all these crazy things going on. So this measure right here, it's not as reliable right now. We need to see this kind of mellow out a little bit to give us a better idea of where things might actually play out. And I think that this will mellow out a little bit after Tuesday when we get that summary of economic projections and when the Fed tells us, hey, this is where we actually think that we're going to take the interest rates. So do pay attention to this in the future, but obviously after Tuesday's meeting, or after Wednesday's meeting, this is likely going to just follow what the summary of economic projections is saying. So now let's go ahead and look at QQQ. So QQQ, I'm not going to do any crazy technical analysis, but I do want to note that, right now we are approaching a potential double top scenario. So I'm going to zoom in on that a little bit. Now that double top scenario could happen right around like 313. So do watch out for that. But right now, we do have a pretty strong bounce off of that 200-day moving average. Now, we also have a rising 50-day moving average. And we recently just saw that golden cross. So right when we saw this massive bounce, we saw this golden cross scenario, which is when the 50-day moving average crosses over the 200. So that would basically produce a bullish scenario right there if we're just looking at moving average crossovers. Now, here's another thing that I want to pay attention to. And let me just show you that right now. So if I do an anchored VWAP from the all-time high, so this was back in 2022, so this was early 2022, if I do an anchored VWAP right here, then essentially what happens is that we have this anchored VWAP all the way right here, and this is right around 316. So this is something we want to watch out for. If we do break this double top scenario, well, then we have this massive resistance showing up at this anchored VWAP. Now look how this played out in the past. So, it rejected right here. It momentarily got above, but it once again rejected right below it. And when it did cut back below this, we saw a gap. So a huge gap occurred. And then you can see that we almost hit this to the point right there in this last run. And then now, we're almost approaching it again. So this is going to be an interesting development. What happens if we actually hit this again? Are we going to break above it? And are we going to stay above it? So obviously, if price action does just rally like crazy during the FOMC meeting, just wait it out a little bit. See how things actually play out. Because there have been times in the past where we've seen rallies during the meeting, but then it quickly reverses the next day or actually the same day. So definitely watch out for how price action reacts if we get up to this 316.50. So something to definitely watch out for. Now let's look at SPY. So SPY I have something different going on, but same concept. So I have these two anchored VWAPs right here. And let's just look at the moving averages. So if we're looking at the moving averages, right now we're actually underneath the 200-day moving average. So it doesn't necessarily matter that tech is just rallying like crazy. As long as financials are tanking, you're still going to have the SPY that's showing a little bit of weakness. So, basically right here on SPY, we saw that golden cross much sooner. But look what's going on now. Now we're below the 50. We're below the 200. And we're actually basically, we are also below this VWAP right here. So this VWAP, if I just zoom out a little bit, this VWAP is anchored to this bottom right here. So we're basically in this VWAP sandwich for a little while. So let me just zoom out a little bit more here. So we're in this VWAP sandwich where we have this top that's anchored all the way here to all-time highs. And we have this bottom that's anchored to the most recent lows. So, we were just chopping back and forth here. We actually got above this for a little bit. But once we cut down below, that was kind of the sell signal right there. And then you saw that we rallied off this bottom anchored VWAP, which also lines up with this 200-day moving average, which is in pink. So right here, we bounced off only to bounce and reject off this anchored VWAP from the all-time highs again. So now we're in this delicate situation where we're below the 200-day moving average, and we're below this lower anchored VWAP. So, what's going to happen next? Do we just bounce off this and we have a massive, massive rally? Or do we just stay underneath this and we start fading? And what's going to happen when we touch this breakout trend line again? So the last time we touched this breakout trend line, it produced this big rally that we're seeing right now. So, what's going to happen if we touch it again? Are we going to break underneath? And if we do, then yeah, it's going to be a pretty big flush. Now, obviously the first area of support is going to be this area of consolidation. So this is going to be right around your like 375 to 383 area. So that's going to be like your first area right there. So you want to see, hey, do buyers show up again right here? And this just becomes a double bottom and then we just rally up again, or do we just sell off from here and this becomes a future supply zone? So something to definitely pay attention to. Now, obviously, if we do rally again, pay attention to this anchored VWAP. So this anchored VWAP is right around 407.64. So keep that number in mind. Do keep in mind also that these anchored VWAPs do change a little bit. So if price action is moving up, this might move up as well. All right, so Apple. So let me just zoom in on Apple right here. So Apple, it looks kind of bullish because, we do have this 50-day moving average that's curling up. We do have this 200-day moving average that is slightly, it's pretty flat, but it's slightly curling. So we could produce a scenario where we have this golden cross. Now, look what's happening in Apple. There's this very clear supply zone. So this is happening right around this 156 to 158 area. So each time we went up in here or even touched the supply zone, we sold off pretty drastically. So right here, we're there again. And this is our 1, 2, 3, 4, 5. This is our 5th test of this area. So there is a good likelihood that we could just break this area. And if we do break this area, is this a inverse head and shoulder? Because right here, we have the shoulder. We have the head. This is the right shoulder. So what happens if this is the right shoulder and it plays out? So maybe, we could have the scenario where we sell off here. We bounce off this support trend line only to rally back up, and maybe we go back to these massive all-time highs. So one thing that I do want to pay attention to, let me just zoom out a little bit here. When I zoom out, there's not a whole lot of support or resistance in these areas. So just look at this. Last time we rallied, we had this massive rally, and we were just chopping. We are having massive swings. This was a ton of volatility. So we weren't building out these solid supports in this area. So this is an area where we just fly into, and then maybe some bad news comes out, and then we sell off like crazy because we don't necessarily have strong supports. So something to watch out for, because if we do break the supply zone area, this thing could literally rally all the way to maybe 163.50. That would be my next guess. So definitely watch out for Apple, especially if you are a bear. Now, the bearish scenario is, hey, you know what? We just top out again. We sell off and we break this shorter term support, and we go all the way back to the 200-day moving average right at 147.67. So that is another likely scenario that could happen. And then this entire move just looks like a double top. So definitely another scenario that could play out. Now let's look at Microsoft. Microsoft is very interesting. So there's a lot going on in this chart. So let me just point it out first. So first we have this rising wedge scenario where, we have this resistance right here and we have this support down here. Now look where we're actually heading into. So we are heading into this area where there is this former gap zone. So let me just zoom in a little bit here. So look at that gap right there. So in my opinion, this could potentially be a sell zone where we go and we fill this gap and then we sell off right away, because look, it's also hitting the top of this trend channel. So do watch out for this. This area would be it would be right around 388-ish. So we could potentially fill this gap, which would take us to around 386, but we could do a little bit more and then hit the top of this trend line, and then we could possibly see a rejection. Now, Microsoft is very overbought. This thing literally went from like 247 all the way to where it is now at around 279. So that is a massive move. That's like basically a $30 move. So yeah, you see a $30 move in a matter of a few days. Now I know there's that ChatGPT optimism going on, and I also do know that we do have those yields plummeting, that optimism going on, as well as the dollar falling optimism. So there is some reasons for a strong move to occur, but is it really a reason for a $30 move to occur in a matter of days? So there is something else I'm paying attention to, and it is the same scenario with the VWAPs. So right here, I did have this VWAP sandwich going on. So this VWAP is anchored all the way to the top, and this VWAP is anchored to the most recent bottom. So right here, we can clearly see that we bounced off it. This bottom VWAP is lining up with the 50-day moving average. We do have this golden cross scenario where this 50-day could cross over this 200-day, which is the pink line. And then you can see that we clearly knifed above this VWAP, this anchored VWAP from the all-time highs. So, what am I thinking right now? I'm thinking that there's a good chance that Microsoft could just pull back a little bit and we could at least see 272 again. So that's my thesis right now. Now, obviously I could be wrong and we could just go all the way straight up here, fill this gap, and then, we'll see how things work out after. Do we consolidate around this gap zone, or do we just immediately reject? So obviously, the Fed meeting will have a lot of implications to how a stock like Microsoft moves. But my thesis right now is, hey, you know what? We broke this. We did not retest it. You can see that in the past, this was a clear form of rejection right here, right there. And then you can see that when we cut underneath here, we saw a massive sell-off. So my thought right now is that we don't just break above this without retesting it. So in the near future, I do expect this retest of around 272. I'm looking for what happens to price action once we get there. Maybe we consolidate for a little while, and then, maybe we make another move up. Maybe we make a move down to test this support. But right now, it is very overbought. Let me see if I could pull up the RSI here. So let's just look for that study right there. All right, so let's see. Load study set. All right, let's look at the 50, 200 MACD and RSI. All right. So yeah, look at the RSI. RSI is giving a 70 reading on the day chart. So that is very, very, very overbought. Now you can see in the past right here, you know, we also saw a 70 reading here as well. So something to definitely watch out for. I think it's overbought, and I am looking for that pullback. All right, so Meta. So similar situation with Meta. So here I actually called this out in a Discord channel, but you know, I didn't call it out in most other Discord channels. So right here, you know, we saw this top, and we have this anchored VWAP that's anchored to the top. We have this anchored VWAP right here that's actually anchored to the most recent gap zone. Let me zoom in on this right here. So here it played out perfectly for Meta because, you know, we just cracked right above this, and I was expecting, oh, you know what? We're here at around 204, 205. I definitely think we're going to pull back to this anchored VWAP area that was right around 195.72. Where did we close? 195.61. So this scenario played out to the T. Now, what's going to happen right here? Do we start consolidating, or do we bounce off of this anchored VWAP and continue on higher? So obviously, you know, I didn't stick around to find out. I took my profits when I saw that retest. Now, am I going to regret it? Maybe, probably, most likely. But am I staying disciplined? Very much so. So like I said, you know, there is this possibility that if we go underneath it, we could go back into that VWAP sandwich where we go right between 182.62 and 195.72. So right here, don't be too quick to short it unless you see us going underneath that. And then obviously if we go back above that, you know, then more risk occurs. And, you know, maybe you want to mitigate that risk with stop losses. So definitely something to think about. And we did see that golden cross a while ago here on Meta. And, you know, obviously we have this huge gap here. Is that going to get filled? I have no idea. But as of now, you know, I am just looking at how price action is reacting to this anchored VWAP right here. I want to see, do we consolidate around here, or do we just knife right below it? And then obviously, if we go and we knife below this bottom anchored VWAP, are we going to fill that recent gap that we produced right here? So different things to think about. Now, looking at the VIX is always very, very tricky. So let me just zoom out a little bit more. So here's what's going on in the VIX. Basically, so far, you know, we are seeing an upward price trajectory because we have this support trend line. And you can see that going back here, you know, we have the support trend line. We bounced off it several times. And right about now, you know, we did bounce off it right there. But we also have this resistance trend line right here. So right now, we're in this broad wedge pattern. So this wedge pattern is defined by this support line down here and this resistance line up here. So we're in this wedge pattern, okay? And VIX is still pretty high. It's at 25.5, so that's pretty high. Now, the obvious scenario that would be very, very bearish is if we see a clear break out of this resistance and we close at the high of the day for several days in a row, because that could leave room to essentially just rocket all the way into this 40 zone. So this can become very, very dangerous very quickly. So, you know, the first area of resistance will be that 35 zone. If we break that, we're going into the 40s. And that is typically when you do see the most fear and where you could see capitulation occur. So I do always want to talk about the VIX in these videos because this is where a lot of the damage could occur. So that basically concludes my technical analysis and just my Fed speak and whatever. So hope you guys enjoyed this video and have a good one. Oh wait, we're not done yet. One last thing. So expected moves, I almost forgot. So expected moves. This is the expected moves chart that I have for March 24th. So you know, if you like believing in this, definitely pay attention to it. So I have it up for you, but do keep in mind that we have a crazy, crazy week. We could go out of these ranges. Last week, we saw Microsoft go significantly out of that range. Like I said, we saw like a $30 move when we were only expecting, you know, like 10-ish, 11-ish dollars. So definitely watch out. We're very, very overbought, but overbought can stay overbought. And sometimes, the market will test your resilience before it actually falls. So that concludes this video, and now I'm officially done.